Alrighty, guys, so we had a red day in the stock market today, and we're going to be breaking that down in this video. We have some earnings to talk about as well. Not the most exciting companies, but we're still going to be covering them. We had Zoom report after the bell today. We had Dell, Urban Outfitters, and we're also going to break down some other stocks, some charts that I'm liking. So sit back, relax, take a sip of your coffee, hit that like button, make sure to subscribe, and let's dive into the video. And by the way, if you guys want some free money, 15 stocks from Moomoo and 12 stocks from Webull, all the details are linked down below. Let's talk. So again, red day overall for the stock market today, and we can see the Russell went down 0.6% in the red day today. The Nasdaq down over 1%, S&P down 0.4%, as the Dow went down 0.1%. And the crazy thing is, guys, the VIX went down over 3%. Now the VIX is getting to a very interesting spot. It is getting to the low 20s, which we've covered time and time again here on the channel over the past year, when the VIX has gone down to the the lower 20s, especially near the teens, 18, 19. That is where it's bottomed out. And I'm not saying for sure that we're at the VIX bottom right now, but it is getting to levels that you cannot deny. The charts, the facts are right here that we've been here and we've bounced back, or the VIX has bounced back at these levels, time and time again throughout the year. There's no denying that. You can see that here back in, the beginning of this year. We hit 16 on the VIX, which is very low. Then it ran up to 38. Almost 40. Then a couple months later, it hit, in April, it hit about 18, ran up to about 35. I mean, you guys see the chart. It's right here. So at this point, we're getting, and let me make sure I make myself a bit smaller so you can see it. Again, we're getting to the lower end of this range on the VIX now, and it probably will come down a little bit more. It might get back to the teens for all we know, but at that point, I might be considering, I'm not telling you guys what to do, but at that point, I might buy some SQQQ, maybe as a little bit of a hedge, maybe not a hedge, or maybe some puts on SPY, something like that. I'm going to be looking at something like that potentially in the short term. So, yeah, at this point, if I pull up SPY, and let me know your thoughts on that down below in the comments, guys. If I pull up SPY, and the reason why I say that is because, at least throughout the year, we've seen the VIX kind of play between this 18, 19, 20 level up to 40. And typically, throughout the year, if it's got, as the VIX has gotten closer to 20, it's been, a good move to go short, or, buy something like an SQQQ. Of course, you have to time it right, but that's kind of been the way this year, the past year, has played out. And you guys have probably seen that for yourselves. If not, it's kind of been how things have played out. If the VIX has gone down to, 20, it's a decent time to look at maybe, taking a little short position or doing something a little bit more risky, which I'm not telling you what to do. I'm just talking about kind of what I'm thinking here. So SPY at this point, by the looks of it, even though the VIX is, coming down to the low 20s, SPY does not look like it wants to slow down. It did have a red day today. We had a red day across the board, but the bulls are still in charge. I mean, there's no denying that. SPY's above both moving averages here on the 4-hour chart. You guys can see this channel I'm about to draw out. Boom, we're still, well within that uptrend. Same thing here with QQQ. If I pull it up, you'll be able to see it. There we go. If I zoom in a little bit, and just clear the set, let me do that. Excuse me, guys. You can see QQQ is holding the trend as well. You guys see that? It's not above both moving averages like SPY is, but it is well above the 180 SMA, which you can see. So, in my opinion, bulls could still have, a fight in this, in this market here. I still think, if QQQ gets over, and the fact that it closed over 280 is good. That was the low from last week. Now, if it starts breaking over 288, 295, this could really start, see more momentum, continue the momentum. But at this point, the markets are really in limbo. We're in this wedge on the 20-day chart like I covered in my last video. We're still in a downtrend technically on the 5-day chart. If we look at QQQ, we're not anywhere near breaking this little mini downtrend, which needs to break for the longer-term trend to play out for the bulls. So let's see, guys. I mean, there's going to be a lot of waiting, and we do have, a holiday this week, short week, and, it's going to be one that a market which might not decide direction until potentially next week. You know what I mean? So let's see how it goes, guys. That is a little breakdown of QQQ, and again, SPY. Pretty much everything here applies to applies to SPY that I just said on Triple Q. And for oil, let's pull that up and see what's going on with oil. It's back over 80 a barrel. As you guys can see, it just hit 75 a barrel a couple of days ago. And if I pull up this 5-day, 5-minute chart, let me do this. You guys are going to be able to see a pretty sharp rally, about 6%, like I said, from 75 a barrel to about 80 a barrel. And the thing worth mentioning is, guys, bears are still 100% in charge on oil here. On the 20-day chart, we're still under both moving averages. We're still at a lower high here, which is not good. On the 4-hour chart, if I pull that up, you guys can see, we're still very well under the moving averages, and we also just took the lows out from the end of September. You can see that pretty much clear as day here. So at this point, oil, it's seeing a little bit of a relief rally. Sure, it could continue to the mid 80s, but bears are clearly in charge on oil, and I really don't see that changing anytime soon by the looks of the chart, unless this thing starts breaking back over 90, which it has some ways to go to do that. Considering it's at $80 a barrel now, it needs to run 15%, pretty much 14-15% to get back over 90 a barrel. So that is where oil's at, clearly in a downtrend. As for energy stocks, right, these are still doing very well. I mean, ExxonMobil's at $110 a share. We just hit 114 earlier this month, about more like 2 weeks ago. And you guys should know, because I covered this on the channel, but if you didn't know, ExxonMobil's all-time high from 2008 was $117. So even though oil's come down a massive amount, these energy stocks, a lot of them are still near all-time highs. ExxonMobil is, again, about $4 or $5 off these all-time highs. We have Chevron. If I pull that up, Chevron is at all-time highs. I mean, this thing hit $189, I think a couple of days ago. Yeah, a couple of days ago, and it's still above the moving averages. This looks pretty good in the short term, I'd say. Other companies such as, what else? MRO is another one. Marathon Oil. This one's pulled back a little bit, and this is actually one that I'm glad I mentioned this, because look at where it's playing right now. This is pretty much playing within $30 as support and roughly $33. You guys see back a couple months ago, MRO failed at about $33-ish dollars, and we just failed again at that point, $33 just now, earlier in November, and just literally last week, and now we just dumped back down to 30. So I think buyers will come in here. This is actually a trading opportunity, in my opinion, for the short term. I'm looking at this one very seriously at about $28, $30. If buyers come in here, which we didn't get necessarily quite yet, it went down 2.5% on the day, but if we do see that pop over, let's say $31, this could be going back to the 33 level. If that breaks, maybe mid-high 30s. So MRO is one that I'm really liking here. What other ones are we looking at? Have we looked at Hess? Hess is another one that I'm watching, down about 2% on the day today. Still clearly holding an uptrend. Looks like buyers are not quite yet coming in, but we'll see if they do here around the 180 SMA on the 4-hour chart. What else are we seeing? DVN, let's see how DVN's looking. Devon Energy, this one doesn't look as good anymore. It did a couple weeks ago, but now the chart has deteriorated. I wouldn't really touch this one. It looks like we have a head and shoulders. That's clear as day here. That's playing out. If this thing dumps under 67, which it looks like it's hanging above that by a thread, Devon Energy's probably going low 60s, dare I say, back into the 50s. That's not looking too good technically here for this stock. And that's pretty much it on the energy side of things. I haven't seen really any other big moves. Well, I probably have. I'm just not remembering them all off the top of my head right now, guys. And by the way, if you're still here, hit that like button. Make sure to subscribe. I appreciate you all, as always, because now we're going to dive into earnings. We had a couple report today, not the most exciting companies, but still, we're going to break these down and talk about them. Number one we have is Zoom. Let's pull that up and see what these numbers are looking like. So Zoom reported earnings, and their stock went down about 2% on the day, a little bit less than that, and they closed at $80. So they closed at $80, and when the earnings came out, it looks like they shot to 86. Now the stock is at 76. So talk about volatility. We're seeing about a 10-11% swing here after the bell. So they ended up doing EPS of $1.07 versus 84 cents, estimated on revenue of $1.1 billion, which came in line with the estimate. So they beat EPS inline estimate on revenue. Let's see here. They see full year free cash flow at high end of 1 to 1.15 billion range. Had online average monthly churn of 3.1%. They see Q4 23 revenue of 4.37 to 4.38 versus roughly 4.4 billion estimated. So that's a little teeny tiny bit under the estimate there. They see full year Q4 2023 revenue of about 1.09 to 1.1 billion versus 1.12 billion, a little bit under the estimate for that as well. So yeah, it looks like revenue is a teeny tiny bit under the estimate for full year 23 rev and the next Q4, the next quarter Q4. So that could be a reason why the stock is coming down here. And I wouldn't say it was too bad of a quarter on the EPS side of things. I mean, they did beat the estimate by a good amount there, but the stock is not liking it. Considering it's a growth company, growth stock, it needs to see growth that is either right in line with estimates or outpacing the estimates. And I know it's a little bit under the estimate, but if you see that word miss, it's like guidance misses estimates or EPS misses. If it's a little miss or a big miss, the word miss, I mean, that itself causes, people to just sell, I feel like, and, it causes sell-off. So, or maybe there's something I'm missing. I don't know. But at this point, Zoom is down $4 after the bell. It's right back under the moving averages. I mean, last week, this thing tried breaking out. It successfully did. We actually took the highs out from the end of October last week. We hit almost $90 a share. Now we're right back under $76, just like that. Zoom's collapsing. And look, the lows from a couple weeks ago, about a month and a half ago, were $70 a share, guys. We're pretty much right there. Zoom is literally right there. There's going to be more downside probably by the looks of it. So Dell also reported. Let me see. What's the ticker? Yep, DELL. Let's see what they ended up doing here. I mean, of course, what else would the ticker be? DELL, right? They closed at $41 a share today, guys, down 2.3% on the day. And it looks like here, after the bell, Dell is up. Look at that. After the bell, Dell's up to about 43 a share, closed at 41. So that is a move of about 5%. Initially, it was up 9% after the bell to $44.70. That is pretty freaking impressive. So Dell Technologies reported Q3 EPS of $2.30 versus $1.60 estimated on sales. In other words, revenue of $24.7 billion versus $24.53 billion estimated. So they beat EPS, beat revenue. Let's see here. Anything on guidance? I'm not seeing anything on guidance, but let's see here. Revenue falls but beats expectations. I mean, I'm not seeing anything on guidance, but overall, I mean, they beat EPS by a long margin, a big margin. 70 cents beat on EPS, revenue beat. I mean, that in and of itself is going to move the stock, especially if it was beaten down, probably pricing in not the best earnings. And you can see here the pattern that I'm noticing is an inverse head and shoulders. Look at that. That is pretty clear as day. To me, at least, an inverse head and shoulders. We have the left shoulder, head, right shoulder. We're above the moving averages now. And after this report, we took the highs out from earlier this month of November, being 42, 43. So there could be a lot more upside in Dell Technologies here, guys. DELL is the ticker. And if this right shoulder plays out, $48-50 could be right around the corner on the stock. So watch out for it, guys. DELL is the ticker. We also had Urban Outfitters report. Let's pull up Urban Outfitters and see what they ended up doing. And wow, this stock's actually done pretty well. It's pretty much, I don't want to say doubled, but it's gone from 15 to $26 in the span of a couple of months here. And it looks like it's about to test 27, which is a big resistance on this 4-hour chart. You all can see that 27. I mean, we failed at that point multiple times over the past couple of months. So let's see what this company did. They did 40 cents versus 42 cents in EPS versus, or rather the estimate. So they missed on EPS, and sales came in at $1.18 billion versus the $1.15 billion estimated. So they beat revenue, missed EPS. Looks like reports, total revenue increased 19%. Oh my God, or inventory rather, not revenue. Total inventory increased 19% year over year. That's a pretty big number. A lot of these companies are carrying a bunch of inventory right now. Urban Outfitters is encouraged by current quarter sales, even as namesake stores struggle, yada, yada, yada. So at this point, if we're looking at the technical picture, I don't really care about the fundamentals, guys, of Urban Outfitters. I'm not buying the stock for a long-term play. But as a trade, I mean, 27 breaks, there could be a big push on this stock. I mean, we're noticing that's a big level of resistance stemming back from a couple years ago. It's also the 180 SMA resistance here on the 3-year chart. So I'd be watching Urban Outfitters with 10 eyes for the next couple of days. I mean, if this thing breaks 27, it could really start moving and gaining some momentum. So, of course, we had Disney today move. You guys saw that, the whole Bob Iger piece of news that came out. He's back as CEO after Chapek was CEO for what, a year and a half, maybe 2 years, however long that was. Not even 2 years. Or actually more than 2 years, whatever it was. Either way, Disney went up on the day. It was the most green stock on my watch list. And mind you guys, Disney is still in a downtrend, so keep that in mind. I mean, my alert's at $110, and that's right by the highs here from before they reported earnings, right from the end of October, early November. If this point breaks 110, maybe we start getting a reversal there, but we're not seeing that yet. And quite frankly, like I said in my last video, and I'm still sticking to this, I don't know if this Bob Iger news will really turn Disney's stock price around in the very short term. Now, will the fundamentals start changing in a couple quarters, right? Now that Iger's back, back running the ship? Probably. And will that reflect in the stock price? Hopefully, right? That's not going to come, though, in probably a week or two. At least I don't think it will be. But in a couple quarters, I mean, Disney stock could really start turning around. Potentially. I mean, there's a lot of unknowns. The recession could get worse. Inflation could get worse. We don't really know, guys. But if, let's say, the recession is almost over, because, I mean, technically, I think we've been in one for a while. Let's say we have another year of the recession, let's say, for example. And let's say Disney starts turning things around, and typically stocks bottom before the recession's over, right? This thing could be breaking out in a year from now. Who knows, really? But, at the end of the day, now that Iger is back, I think he's going to turn this thing around and really start paying that debt down, really start, just preparing for, the worst potentially that could happen, and really just get the company through. Because back in the last recession, if you guys remember, Iger was actually the CEO of the company, and you guys can see what happened after the the '08 recession. The company obviously grew a lot more. The stock went ballistic. So let's see how it goes, guys. I think Disney is one that will do well, and I'm an owner. Full disclosure, I do own Disney stock, and let me know in the comments if you own Disney stock. So yeah, we're about 17 minutes in. What else was moving today before we wrap the video up? Foot Locker had a pretty good day, 3.5%. I mean, this thing reported numbers. Now it looks like it's playing, they reported on Friday. Now it looks like it's playing back up to $40. It's at 37. So this could continue, guys, to $40. I mean, we ran up to that after earnings just on Friday. And I think it was, after the bell, it ran up to 40, or rather pre-market, it ran up to 41. So that could be where it's going to retest that Foot Locker to about $40 a share. Chewy had a great day again today, guys, 1% day. It looks like it's playing here within 40, 45 bucks. I feel like this could be going back to test the mid 40s by the looks of it. Vici had another 1% day, which is a REIT. I own this. I've been doing well with it. And, my whole real estate investment trust portfolio has been doing very well throughout the course of this year. I think last I checked, I was pretty much break even on the year on that portfolio, which is amazing considering SPY is down, 30%, or not 30, like 20% or something like that. So on that note, guys, I'm going to wrap the video up. And, we talked a lot about the markets in this video, broke down some energy stocks, some earnings. I'd love to know your thoughts in the comments down below. If you enjoyed the video, hit that like button as well. Check out my Patreon, and don't forget to get your free stocks. You get $10 plus up to 15 stocks from Moomoo and 12 stocks from Webull. All the details are linked right down below. And with that being said, cheers. I'll catch you in the next video, guys. Peace out.